In our last segment, we discussed about the meaning of depreciation. Means we have to provide depreciation on every fixed assets like computer, vehicle, machinery, etc., etc. And we always calculate annual depreciation, means the depreciation for the year. Now the question is, why do we need to calculate the value of depreciation on the assets? The reason being, if you don't consider the value of depreciation, you won't be able to calculate the true profit of the firm. For example, you buy a machinery today to make plastic pens, and the value of the machine is 10,000 rupees. And the working life or useful life of this machinery is only 2 years. Means after 2 years, you won't be able to use it. And during this year, you buy the raw material for the pens rupees 5,000 and you sell all the pens for rupees 15,000. Can you say that you have made a profit of rupees 10,000 because your purchases were for rupees 5,000 and sales were for rupees 15,000 and you have made a profit of rupees 10,000? No, it's wrong. You are forgetting one main thing, that the value of depreciation on this machinery for 1 year is rupees 5,000. On one side, you have made a profit of rupees 10,000 through sale of goods. On another side, you have lost the value of the machinery by rupees 5,000. In fact, the true profit is rupees 5,000, not 10,000. So in this way, if you don't consider the value of depreciation, you won't be able to calculate the true profit of the company. Under matching principle of accountancy, you have to consider all the expenses and all the incomes during the year. Only in that situation, you will be able to reach the true profit of the firm. So depreciation is the main expenditure. It must be considered to calculate the net profit of the firm. So one thing is clear, depreciation is an expense for the firm and it must be considered to calculate true profit of the firm. One thing more, all the theoretical aspects or legal aspects or technical aspects or accounting aspects of the depreciation, I will explain you after the practical questions. First of all, I will start the practical questions. When you have understood all the practical aspects of the depreciation chapter, it will be more easy and more convenient and more interesting to understand the theoretical aspects of the depreciation. Let me explain this concept with one more example. Suppose a company buys a machinery for 10,000 and the recommended life by the company or by the manufacturer is 3 years. And after 3 years, the scrap of the machinery can be sold for rupees 1,000. All this text of the question can be presented in this form. I am to say through these outlines. So this can be the style of outlines of the questions. 10,000 bar means the vertical lines, 3 years bar 1,000. It means the machinery was purchased for rupees 10,000 and the useful life was 3 years, and after 3 years the scrap of the machinery could be sold for rupees 1,000. If you have bought the machinery, naturally the machinery is made of some iron. If you can't use it as a machine, at least you can sell it, sell the iron for rupees 1,000 as a scrap. So this 1,000, the value of scrap is called scrap value or net realizable value or salvage value or residual value. So there are different names for this rupees 1,000, but I will call it in my questions scrap value in future. Now the thing is, we have calculated the working life or useful life of this machinery is 3 years. It means the company, I mean to say the manufacturing company, has recommended that this machine should not be used for more than 3 years. After 3 years, it can be risky, or maybe it can demand more money on maintenance or repairs, etc. I have already explained you. Generally, for all industrial products, the manufacturing company recommends the working life of the machinery. Just like if you buy the bulb or tube, it's always written on the box. The working life is 1000 hours or 2000 hours, etc., etc. And sometimes the manufacturing company doesn't recommend the working life. When you buy the machinery for your company, so you have to calculate based upon your own judgment that what should be the working life of this machinery. If you don't know the working life of the machinery, you won't be able to calculate the full value of depreciation, and in turn, you won't be able to calculate the annual depreciation of the machinery.